credit score numbers tells the banks and the people how much they should loan to. So a good score means you have a better chance of getting that house or getting the loan for the car and things like that. And then conversely, how you pay that loan off determines your credit score, right?
Absolutely. There's never been a more critical time than today to have an elevated credit score. I work in the mortgage industry specifically, and the credit score is a determining factor. And the main factor we use in evaluating the percentage interest rate that they might attain or their ability to even acquire a loan.
And so if people have bad credit score, first of all, tell us how you find out what your credit score is, and then also, if it is bad, how can you improve it?
Well, a credit score that is industry specific, like the mortgage industry, can be achieved by contacting a local mortgage company or your bank to ask them to do a credit review and an evaluation to see where your rating would be. There's 3 scores achieved by those 3 companies, and you take the median or the middle one, and that is how you achieve that score. You can also use freecreditreport.com as a tool.
I've heard the song before.
Yeah, it's a great one. It's a catchy jingle. And that's a way to look at your credit history, but it doesn't achieve the same scoring model that it does in your industry specific.
And you don't want to check all the time because the more times your scores are pulled, it actually hurts your credit score because it makes them think, well, why do people keep checking this person's credit score, right?
Absolutely. It's an indictment to some degree that you're out there achieving more and more credit, opening up more and more potential risk for credit over time. So opening a score or checking your score multiple times in a short period of time can affect your score in a downward capacity.
And how do you improve? How do you make it better?
That's the challenge. Is there's no perfect formula, but what we can say is if you can take those higher balance limits and reduce them percentage-wise, under 30% of your maximum credit limit is a contributing factor towards a higher score. Paying your accounts on time and over the last 12 or 24 months also helps. Limiting the total number of trade lines, but having too few also will hurt your score. You need to have a certain number and a certain variation. You need to have installment loans, mortgage ideally, if you haven't had the ability to pay it off, revolving accounts, things of that nature. So a good mix, a low balance on that achievable credit, and pay on time, and your score will be just fine.
We have a link to the Clark Financial Group on our website, and if you have a credit card, don't cancel it because that hurts your credit score. You can't answer that because we're out of time, but I read that on your stuff earlier. So we'll have to have you on again. We'll have to talk more about this because we could talk probably the entire hour about stuff like this. Well, Ryan Seacrest looking to do some reality TV.